Welcome back to Squawk Box. A blowout quarter for big tech. Amazon reported a record profit. Facebook forecasting growth, ad growth that is. Apple crushing the estimates, now splitting its stock 4-1. That's going to happen at the end of next month. And then Alphabet reported better than expected results, though overall sales fell. Our next guest owns all four. Howard Ward is Chief Investment Officer for Growth Equities at GAMCO. His GAMCO Global Growth Fund is a 5-star fund at Morningstar and was named the top global large cap growth fund for the past 10 years by Lipper in 2019 and 2020. So, Howard, the question is, given where the stocks of these companies are living right now, and we can talk about some of the multiples and the like, and how well they're performing, whether you still buy in from here.
Good morning, Andrew. Thank you for having me. I will give you two answers to that. I can't really help someone who wants to be a short-term trader because that's not what I do, and that's not our time horizon. But if you're an investor and you're looking for something to own for the next 3 to 5 years, you absolutely can be comfortable buying these stocks today. I will admit that I am amazed at how well these stocks have done over the years. And the quarters that were put up yesterday, particularly by Amazon and Apple, were simply astounding in some respects. Facebook was no slouch either. And Google, of course, beat estimates, but they did take a little bit of a hit with to the advertising side of things, which was to be expected. And that will now be a cyclical kicker as the economy reopens. But frankly, these companies own their platforms for the most part. Now, Apple doesn't necessarily own a platform, but it owns the high end of the smartphone market and related technologies. And so I don't see anything that's going to disturb the growth path that these companies are on for the next several years. I'm sure over time, the situation will become more complicated. But right now, these companies are, in fact, dominant in the platforms, which, for the most part, they created. Right. And my hat's off to Jeff Bezos and Tim Cook and others.
Howard, if you have, I mean, we talk about them as a collective, and maybe we should in certain ways, but in other ways, they're all very different businesses with very different issues and, frankly, very different multiples. One of the points that Wilf was making just in the past half hour is on a multiple basis, you could argue that Google is cheap, or at least much cheaper. How do you stack, if you will, these four companies if you're a long-term investor?
Well, it's funny. You're right. They have different multiples. I think that in each case, the stocks are very defensible when you get into the cash flow metrics. But let's talk about the valuation question, because when you look at Amazon in particular, Amazon is a stock that people have used valuation as a reason not to own Amazon ever since it went public. And that didn't work out very well. It worked out very well for Jeff Bezos, on the other hand, to become the richest person in the world using a management philosophy of foregoing short-term profits. I think that has turned out very well for him. And I think there's a lesson in there, not only for other companies and their approach to managing their businesses, but it's a lesson for investors as well. Because investors that took that long-term ride with Jeff Bezos have done very well. And I could really make the same case for these other companies, which for the most part are not driven by short-term metrics. And the valuation argument, we have to remember as investors that, yes, valuation matters, but a lot of the time, valuation is not a factor determining equity performance, not a factor at all. And in the world of growth stocks, that's probably more true than in the world of value stocks. Right. But I think valuation in some respects takes up too much of the energy in the space. The focus really should be on more of these growth metrics and how strong the moats are that these companies have.